All right, guys. There
we go. I know I'm really early this morning, so good morning, guys. Hope you guys are good. We got SoFi earnings pretty early this morning, Q2 earnings. Let's see what they show up as. Let me do a poll. So we have SoFi earnings dropping at 7 a.m. Eastern Standard Time in about 25 minutes. PayPal drops at 7:30. Pfizer's already out. All right, so there we go. We got a poll live. What's up, Johnny, Vishal, Pawn, Martin, Joseph, Rav, Red, Sandy, Mo. All right, let me drink some coffee, dude. I haven't had any coffee this morning. I had to go plug my headphones in just in case. All right. Yeah, it's weird. So, I thought I had Boost. Let me log in. I think it's, there we go. All right, so let me look at the polls so far. So far, 67% think SoFi is going to beat, 33% think they're going to miss. Looking at SoFi, it's down to 715s. I am in SoFi. I've been in it for a while now. Hit highs of 806 back earlier this month on the 18th. We do have, we had a couple earnings already come out as well, though. So we had some earnings already drop. We had Merck. BP is supposed to drop. Procter & Gamble is out. PayPal drops at 7:32. What's up, Blaze? Is Crowdstrike down? Yeah, I sold my Crowdstrike a while back. Like, I just wasn't super interested in it. Yeah, Crowdstrike's down a lot. This might be when I buy it up too. I just have to wait to buy it. No, I'm not in Crowdstrike anymore. I sold it. But I might add it back down here. This is pretty cheap. I'm actually greening Google this morning. I'm in SoFi. So SoFi is expecting, we'll put this up on stream. SoFi is expecting 0 cent profit per share. on revenue of 563.14 million. Numbers drop at 7 a.m. Eastern Standard Time right here. So we also have PayPal supposed to drop at 7:30. So we have PayPal Pfizer at 6:45. So Pfizer's coming out in 3 minutes too. BP should have already dropped this morning. Let me see. All right, so BP ended up posting. Let's see. Drinking my coffee, guys. Crowdstrike bouncing back though. So Crowdstrike dropped all the way to 244s. I'm trying to see if there's any news on this. BP did drop. They posted $1 EPS versus 92 cents expected. Sales of 47.229 billion. They missed the 52.925 billion estimate here. So I'll put this up on screen. Yeah, SoFi EPS. Yeah, so SoFi's EPS graph isn't looking too hot, but it's getting better. Like one thing that you see, like these are margins, right? So companies aren't always going to have the best margins. One thing that you see is they had really bad margins back here, and they're slowly getting better. Like they're slowly thinning out here. The last couple quarters they were actually profitable. They showed 2 cents profit, 4 cents profit in the quarter prior to that, and their EPS is trending better. If it continues in this trend, you know, hopefully they'll be profitable. Yeah, so CrowdStrike had earnings. They posted or no, CrowdStrike didn't have earnings. CrowdStrike is down. A report about potential legal action from Delta Airlines gave the cybersecurity company investors another reason to panic. Stock is down to 246s, 4.8% down in pre-market. Delta hired big-name attorney David Boyce to seek damages from CrowdStrike and Microsoft after a tech outage earlier this month forced the airline to scrap thousands of flights, according to CNBC. So yeah, Delta, CrowdStrike, and Microsoft didn't respond to Barron's request, but that's what's going on here. At least 16 analysts cut their price targets over the past week and a half, according to data from FactSet, although most have stuck to the buy or overperform ratings they've given CrowdStrike before the glitch. They said, quote, we viewed the incident as a black swan event and think that the quality of response from the company would go a long way towards supporting the business and the brand long term. And so yeah, that is what happened here. CrowdStrike bounced it all the way back though after this report. I am in Meta as well still. I'm in Tesla. Tesla doing really well, up to 230s right now. Meta's green. We bought some Microsoft. We're red on the day, or we're green on the day, but red overall, slightly red. We also have PayPal today as well. So PayPal is supposed to drop. They're expecting 96-cent profit on 7.78 bill in revenue. Shorting McDonald's. I'm not gonna mess with that. Tesla did well at 230 yesterday, I guess. Love to see it. Hope for another move to 270s. Yeah, maybe. Yeah, McDonald's did have a pump. McDonald's is red on the year, though. I mean, you know, Tesla's interesting to see. Like, if we look at Tesla, there's NVIDIA, here's Tesla. Tesla's slightly green, but, you know, if we move up here, I'm still in Tesla right now. I don't really have any plans to sell it. I think my average price is 170s, so I'm doing okay in it. My plan is just to kind of keep in it. So PayPal also releases at 7:30. And is expecting Pfizer should have just dropped. So Pfizer should have just came out. Let me see what they showed. So Pfizer posted 60-cent profit. They expected 46-cent revenue of 13.2. They expected 12.9s. They raised their guidance. I'm in Pfizer. This should be good for me. And it is. Okay, nice. So I'm in Pfizer right now. And Pfizer's up big. Nice. My average price in Pfizer is $30, roughly. We're up to almost 32s right now. So again, look at Pfizer run here. So Pfizer did just release. They posted better than expected EPS revenue and raised their full year guidance. So looks good. Looks good. It's not gonna let me take any off here, I guess. I gotta wait until the closing bell today. Yeah, so we got a lot of stuff going on this week too. Yeah, so again, SoFi, if you don't know what SoFi is, SoFi is an online lender, basically, is what it is. If you don't know what SoFi is, it's an online lender, basically. It's a little bit different. It's a little bit opposite of convention here in terms of what SoFi does. It's a pretty well-known name, to be honest. Like, it's a pretty well-known name. Pfizer, again, up there. Looks good. Looks good. SoFi is short for social finance. It's a finance company founded in 2011 by a group of Stanford Business School students. It aims to help people achieve financial independence through a variety of financial services and products. It does lending, investing, banking, credit card, insurance, financial management, and tech platforms. It operates Galileo, a tech platform offering services to financial and non-financial institutions, and Technisys, a cloud-native digital banking platform. So it mostly generates revenue from lending. If you don't know about SoFi, it'll kind of loan you small loans on things like, I know they're connected to Amazon sometimes and other companies where they essentially allow you to, get small amounts of loans. Like if you're buying something, like as an example, like $1,000, right? You can get a SoFi loan and sometimes get it as long as your credit's good enough. You can get a SoFi loan and then, you know, have small loans that you can pay back. Good for building credit, I think, too, right? But they've been around for about a decade now. They went public in 2021, though, through a merger with a SPAC. They're headquartered in San Fran, so. All right, guys, 9 minutes before SoFi earnings. We'll see what we get. Yeah, I'm in Pfizer right now. It looks good. I've been in it. It's been kind of one of those trades where I've been basically flat on. Like, I haven't really made or lost a bunch of money on it. I've been essentially flat, which I'll take. So for me, I did liquidate some of my positions yesterday. I sold some of my, you guys know I had a big Nike position. I'm still holding a majority of my Nike shares, but I did sell some of it. I also sold some of, what else did I sell? I'm almost flat in Disney, which looks good. I'll take it. I'm almost flat in Disney now. Or no, I'm almost flat. Target's still green. What else did I sell? I sold some of my MU trade that I was down on. So I was down on MU. I was down on Disney. And I think MU will eventually bounce back, but I think the risks there is that if microchip continues to correct, MU is going to continue to correct. I just don't feel like getting stuck in that, to be honest. So I don't mind limiting my positions if I'm wrong. I'm still up thousands on the year, and like I'd rather protect those profits versus like look to gain more. I'm still holding a big enough position, specifically in Nike, to where Nike's all the way up to 74s basically right now. So Nike is almost flat there too. So like we could probably make back anything we lost plus more in Nike if we hold it right. Yeah, so SoFi does student loan consolidation as well. So it should be fun. We'll see what happens, you know. All right, so we did this poll. 65% say beat, 35% say miss. Again, here's SoFi leading into their earnings report drop in 7 minutes. They're at $7 here. $7. See if it holds. Yeah, I'm not selling Tesla. I'm in Tesla at too good of an average. You know, it's up to 230s. It looks good. You know, I just think it's important to limit my positions. Currently, my current portfolio list is Apple, Airbnb, AMC, Alibaba, Chewy, Salesforce. Salesforce has actually treated me really, really well. My average price in Salesforce is 224s. It's almost up to 260s right now. So really good percentage there. CVS, I bought CVS not too long ago. It's a dividend-paying stock. I'm pretty sure we're in at 224s for, we're in at $55 for CVS. It's currently at $62 roughly. Does CVS pay dividend? So CVS does pay a divvy. They pay a nice divvy too. 266, 5% almost annual dividend, 4.4% annual divvy. Low PE ratio for CVS as well. So yeah, I'm in CVS. Nice trade there too. Delta, we're in Delta. We're green on Delta. Disney, we're basically flat on Disney. Etsy, we're red. We've been holding this one for a while now, but we're still red. We're in Ford right now. We added some shares to it yesterday. We'll see what happens with that one. One of the only positions I'm adding to, really, I think. We're in GameStop, doing well there. Google, we're in Google. We're green on Google. We added to Google after dips. We're green on it now. Home Depot, another one of my really good averages. We were in at 270s, but now we're at 326s. 326s is at 360s right now. Honeywell is trying. So we're doing well there. Watching SoFi pretty closely here, chat. So SoFi at 7:05. Again, they report earnings in 5 minutes. It's 5 minutes. After that, we have PayPal shortly over. We'll put a timer up here. All right, guys, and 3.5 minutes left for SoFi earnings. We'll see what they do. We're in Pfizer as well also, but we're in Home Depot. We're in Honeywell. Good averages there. Honeywell average 186s, 201s. Intel, we're in at $30.70. It's at 30.85, so we're slightly green. Coca-Cola, we're in there at 52. It's at 66. Southwest, We bought it a couple days ago. We're green on that one. Meta, same thing. We bought it a couple days ago. We're green on that one. MGM, we're green. 39 average price. $43 is where it's at. Microsoft, we're break even on that one. MU, we're red. Nike, we're red. Nvidia, we're very green. Pfizer, we're very green. Palantir, we're very green. PayPal, we're in PayPal. It's slightly red. Shopify, we're break even. Snapchat, we're very green. Snowflake, we're very red. We're in SoFi. We're in SoundHound. We're in Target, Tesla, Tyson Foods, Uber, Walmart. Hey, what's up, Tiny? Good morning. All right, guys. We got 2.5 minutes. 2.5 minutes for SoFi earnings. We'll see if we get anything good. Again, after that, we have PayPal numbers, and then today we have the JOLTS report. So we have the JOLTS job report later on this morning, too. A lot of stuff happening today. Today, guys, we have a gang of economic stuff, right? So we have PayPal earnings after SoFi earnings drop in about 2 minutes. SoFi earnings, big report, drop in about 2 minutes. So we have SoFi earnings in 2 minutes, right? 30 minutes after that, we have PayPal earnings. We've got the SoFi earnings report at 8 a.m. Following all of that stuff, at 10 a.m. today, after the opening bell, 30 minutes after the bell, we have the JOLTS job report, as well as we got the JOLTS job report again, as well as CB consumer confidence data, and that will move markets. The JOLTS report will move markets. It generally, has a big influence over markets in that way. That drops at 10 o'clock this afternoon or this morning. Following all of that stuff, chat, we do have big earnings plays afterwards. Not only do we have, again, Procter & Gamble early this morning. Procter & Gamble just dropped. Pfizer just dropped. They're both relatively positive. Procter & Gamble came in at 140, revenue of 20.5. They missed on revenue, though. BioNTech. But, again, today's huge. So today in earnings after the bell, we have AMD, Microsoft, Starbucks, Pinterest, First Solar, Lemonade, EA, Caesars, Stryker, bunch of other ones too. Big ones, AMD and Microsoft today. So those are huge earnings this morning or this afternoon. We're going to stream both of them live as we do. And yeah, we'll see what that looks like. Yeah, get ready, guys. We got less than a minute here before SoFi drops. Less than a minute. Last minute predictions in chat right now. What do you guys think they're going to show? The votes have 64% thinking beat, 37% thinking miss. The SoFi earnings calls later on this morning. It's at 8 a.m. Eastern, so in about an hour. All right, guys, here we go. Here's SoFi's numbers here, chat. This is a little bit early. They really drop in about 5 minutes or 5 seconds. Here we go. SoFi earnings. You can see SoFi on the right side. Let's see what they show up. All right, so there's the earnings report. They popped up to 730s here, guys, on the earnings report. 730s, waiting for the actual numbers to drop here for SoFi. But it looks like SoFi numbers are out. All right, so they initially gapped up. They're at 717s. Remember, they're expecting zero cents. So they're expecting completely flat quarter versus 563.14 mil in revenue. So SoFi is out. They posted net revenue of $599 million, net income of $17 million for quarter two, marking the third consecutive quarter of GAAP profitability. So again, their net revenue was $599 million. So yeah, we're looking at their numbers here. Anthony, CEO of SoFi, said, quote, "We had an exceptional second quarter. Our relentless focus on product innovation and member growth across our portfolio of businesses not only drove strong results today, but we expect they'll fuel financial growth for years to come. Our one-stop shop strategy continues to deliver strong, diversified growth and profitability despite macroeconomic volatility. Our financial services and tech platform segments now make up a record 45% of SoFi's adjusted net revenue, up 38% year over year and 32% from 2 years ago. He said in the second quarter, the businesses grew revenue by a combined 46%. 46%. year over year, given our clean structural advantages and leading value proposition in finance, along with tech platforms' continued progress on its journey of becoming the AWS of financial services. So basically, that's what they said. They're up to 740s right now, chat. 740s for SoFi. Yeah, so they did pretty good. Let's see. They're gapping. This is nice. This is my second play this morning that I'm up on. So, so again, they reported net revenue of 599 million, net income of 17 million. We'll put this up on screen so you can see it. There you go. PayPal just released as well. So PayPal just did a surprise drop a little bit earlier than expected. They posted 119 EPS versus 99 cents expected, revenue of 7.89. I'm in PayPal also. We'll put this one up in chat. So again, my portfolio is looking pretty good today. Pretty good. We're in PayPal also here. Nicely green. But yeah, we put PayPal's numbers up in chat. I'll put these numbers up on the left side here. You know, I'm having a hard time finding the EPS, though, anywhere. Let me look in the... That's weird. Okay, so yeah. So here's their EPS and revenue. All right, so now we're dipping down a little bit for SoFi. We're at 720s here, 720s. But again, SoFi posted a GAAP EPS of 1 cent profit in line with estimates. Sales of 599 beat the 564 estimates. So yeah, SoFi beat. All right, look at PayPal flying up as well here. SoFi correcting some, coming all the way back down. So SoFi coming all the way back down. We're at 710s here. Pfizer dipping down, but PayPal rising up. Again, I'm in all of these right now. I'm in SoFi, I'm in PayPal, I'm in Pfizer. It looks good, Chad. It looks good. I'll take it, to be honest. Everything basically beat today, though. So when we look at stuff here, so at least in terms of EPS, everything beat EPS. Like PayPal dropped 119 EPS versus 97 cents. Pfizer dropped 60 cents EPS versus 45 cents. Procter & Gamble dropped $1.40 versus 137. BP dropped $1 versus 92 cents expected. Merck dropped 228 versus 216 expected. JetBlue dropped 8 cents profit when they expected a 16-cent loss. LDOS dropped 263 versus 226. Everything beat EPS today, basically, except for a couple examples, like, yeah, except for like enterprise products. But everything else did. Pfizer up big, starting to dip down a little bit. SoFi still holding its green stance. It's back up to 720s. And again, I do have an average in SoFi here. Am I muted? Yeah, Marquez, that's just you, bro. No, we hear you? Okay, cool. Yeah, that's what I thought. All right, guys. So far, so good, though. SoFi up. Looks good. Up to 730s. All right, so let me end this poll here. You're good and unmuted. Yeah, that's what I figured. All right. Does today's jolts report show up higher or lower than expected? That's going to be a good question. Does today's jolts report show up higher or lower? SoFi testing the previous close. Still technically red on the day, though. Gapping down a little bit, but bouncing up on better earnings than expected. Again, they posted $599 million for rev, $17 million for quarter two. Posted 1 cent profit EPS per share, showing this was their. Let me see which can. They also raised guidance as well here, chat. So SoFi raising guidance. All right, so here is what we got. So again, SoFi raises guidance, shows 1 cent profit per share EPS, reports net revenue of $599 million and net income of $17 million for quarter two. Look at PayPal rise here, guys. So PayPal almost up to $62 a share this morning with earnings plays. But they're moving up. Look at PayPal go. They're trying. Are we telling jokes this morning? I'm a chess player too. I love chess. I'm the London family checkers and chess champ of the world. Okay, nobody's ever beat me ever in my family in chess or checkers ever. We've been playing it for a decade now. Nobody's ever beaten me. It's good for my son though. I'm not letting my son win either. My dad never let me win when I played him in chess and checkers. I'm not about to let my son win either. When he really beats me, it'll be that much more meaningful. My son races me too, like on the feet, right? So every time we go for a walk, my son tries to make some type of deal with me. He says, "Hey, Dad, if I beat you at a race to home, you got to give me $10 in Minecraft money." And I'm always like, "Yeah, sure, we can make that bet," you know. And then my son just, he does not win. But I told him, I was like, "Look, one day you're gonna win, and then that's gonna be even more meaningful. But right now, at 10 years old, you're not beating me, kid, And again, I'm not one of those guys that lets his kids win too much. I think it's good. You got to embrace competition, build it up. Yeah, SoFi beat EPS, revenue, guidance, still down a little bit. Pfizer starting to fall back down too, and I'm in all of these here, so I don't really love to see it. I'm still pretty green on the. I'm honestly more green now than I was 5 minutes ago, which is interesting. Mostly PayPal helping me out. PayPal up a lot. I'm in PayPal, Google's up a lot today too. We'll take it. Pfizer, I'm still green. Although I'm less green, but I'm still greenish. PayPal did good. Yeah, PayPal did better, SoFi guidance firm, kind of hard under preset. Yeah. Pfizer dipping all the way back down to one of the moving averages too. Look at this dip under the volume weighted average price. Let's see if SoFi, the big thing is, can it go green on the day? Like, can SoFi go green on the day? We'll see. But that's the big question, is can it go green? Previous closing price is at 733. It's about 5 cents above us right now. Can it go green on the day? Will Pfizer bounce back as well here, chat? I'm going to take a couple shares off of... we're going to take a couple shares off of Pfizer just to lock some of that profit in. We actually got filled at a good fill there. We're up nicely on the day too. PayPal will probably do the same thing. Take just a little bit off, man. Right at the highs. Hold on to the rest. Let it sit. Somebody asked me, do I think I'm too diversified? Is there such a thing? I mean, listen. I'm not saying I'm not going to go like big size in anything whenever we get opportunities to. But right now is not the time where, like, okay, an example of this is if we had like an emerging technology that I thought was undervalued in any specific sector, I don't mind going really big in that specific thing, right? Right now, I think we're kind of the opposite. We've already had AI like boom, and this is stuff I've been saying prior to anything right now. So I've been saying prior to this that the market's a little bit too high for me. I'm not really a big believer in buying up this current market right now. Again, I told I told people before this happened that we kind of needed a correction, and maybe this is a good enough correction, you know. So the SPY has pulled back heavy. If we look at the Q, look at PayPal break highs again. It's up to 62s. SoFi is getting ready to try to break 733s, the previous closing price. Here's the Q. So the Q is pulling back heavy as well. But again, we're in kind of a market where I need stabilization first. You know, I need stabilization. Look at PayPal up more, up to almost 63s. Here's NVIDIA. NVIDIA has had a big pullback here. But is it enough is the question mark. Is it enough to avoid a major correction? I don't know. If you have $100 and invest $1 into 100 companies, I say yes to diversified. Yeah, maybe. You know. I don't know. I mean, I'm up thousands a year on my portfolio, and I think one of the best things I have going for me is my stock selection. I'm not trying to be too braggy, right? I just think that I can identify stocks that have a high probability of bouncing, and I think that's treated me very well over time. And so I'm just going to continue to do that. If I find something I really like, I don't mind taking large size in it. I really don't. But I have to find something I really like. And right now, I think that's slim. There's slim pickings for that right now, to be honest. Better to diversify than to go all in on one company, though. I don't know, man. I think there's a couple different trains of thought. SoFi, with that said, going green on the day now. So SoFi actually green, which you love to see it. Yeah, SoFi is technically green on the day. Let's see if it continues. There's a couple trains of thought with that, though. You know, like, so they say most modern billionaires became that way. Most self-made billionaires, that is. Let me rephrase this. Most self-made billionaires became that way, they say, by going really, really hard into one specific thing, right? So they went really big into one specific thing and became billionaires because they bet correctly on one thing. They put everything they had into one thing, right? And that makes sense if you look at history of business. Like, you know, they go really big on one idea or one business, right? I would then go to say most millionaires are kind of the opposite, but most millionaires are actually just real estate millionaires from appreciation over time of their properties. And so I think those are good role models to have, but I think it depends on the type of wealth you're pursuing. You know, if you want to be rich, like FU money rich, you probably want to go big in one thing. You got to just wait for it. And it's not always the time to, because if you pick wrong, you're going to lose tons of money. So there's a lot to it, but yeah. What do you guys think? Do you guys think it's better to diversify safely or go big in one thing and try to get ultra rich? You know, I think there's pros and cons to each. There's risks to each. The risks of too much diversification is too little growth, too small of growth, right? The risk of going all in on one specific thing is obvious. It's a very self-evident risk, which is that you might lose everything you got. If you put it on one thing and you're wrong, everything's gone, you know. Anyway, SoFi is still technically green on the day. Let's see where Pfizer's at. Did Pfizer end up bouncing here? Pfizer at 3140s. Why is SoFi showing gap down opening and pre? I mean, SoFi is technically green on the day now. It was slightly red, but it was gapping down ahead of earnings. So in pre-market, SoFi was gapping down and downtrending yesterday too. So SoFi was red yesterday, and in pre-market this morning leading into their earnings report, which dropped right here. And then after that, it has since propelled higher and gone green on the day. Slightly green, but green nonetheless. You know, SoFi has a small range for a company. Like, it's not a big range stock. If you look at, like, the long-term movement of SoFi, it's not a huge range. And it's a downtrending stock as well. But the range is small. It's been between, you know, $8 and $6 since March, you know, February. So it's between $8 and $6. So it's been 25% range, which isn't necessarily small, but for everything else moving as much as it has, I would argue the range is a little tight. The billionaires had multiple businesses and properties. Yes. Once they became billionaires, they did. Right. But billionaires generally, like there's a lot of examples of this, right? Billionaires generally become that way because they went really big on one specific thing. Take Elon Musk, right? He went really big in EV and tech. Take Bill Gates, went really big in computers, software, operating systems. Jeff Bezos went really big on Amazon, mail order shipping, you know, mail order shipping products, you know, online sales and mail order shipping. You know, there's a lot of examples of this, to be honest. But yeah, I mean, most of the billionaires go big on one thing. Yeah, no, that's true. Easy for sure. 100%. Well, AMD and Microsoft move overall. Yeah, what do you guys think will move the market more, AMD or Microsoft? I think Microsoft's the more heavily weighted stock, but AMD's a microchip stock in a big environment of microchip interest. So, you know, I think either one of them is arguable. I don't know which one I should cover as my main stream, right? We're probably going to stream both of them and just do multiple different streams for each. But yeah, let me know which one you think we should cover. We got AMD, Microsoft. Microsoft's the larger company, for sure. It's one of the largest market cap companies in the world. But AMD's a microchip stock, and it's a big company. It's not that far behind. I guess it is. Let me see. See, the thing I like about about AI, this is why AI is powerful. I can say compare AMD and Microsoft in terms of market cap and size. And it can give me a full-on report. It says, as of July, the market cap of AMD is approximately $225 billion. This places AMD among the top semiconductor companies globally, but it's way smaller than Microsoft. Microsoft's market cap is around $2.43 trillion. So Microsoft is a leading player in tech and just a much bigger company. Microsoft has trillions in market cap. AMD has $225 billion. SoFi now under the previous closing price, now technically red again here, chat. So again, SoFi under the previous closing price, technically red again. Again, AMD is a semiconductor, CPUs, GPUs related tech. Microsoft is diversified, of course, now. Originally a software company, but has since branched off and done a bunch of stuff. AMD is considered a large cap in semiconductors. Microsoft is one of the largest mega cap companies. So yeah, Microsoft's the bigger company, but honestly, in terms of popularity ratings, AMD's scoring higher right now. Let me see if AI can do that. What earnings report is currently more anticipated, watched, and overall garners more interest? AMD or Microsoft? Both dropped their earnings today. So let's see what report they give us here. So again, SoFi technically green. Pfizer consolidating back and forth here. Microsoft. All right, so it says Microsoft is going to garner more attention and interest. Just because of Microsoft's larger size, broader portfolio, substantial influence. I don't know, man. I think we're going to cover both, right? But these are both big. I think they're at different times, though. So I believe Microsoft's earnings call is at 5:30. AMD is at 5, right? So we'll probably cover AMD's first and then pivot to Microsoft's later on if we can. SoFi is a good idea, but a bad stock. I mean, like, look, so we got to take a look at SoFi revenue, right? So here's SoFi's revenue graph. I think it's always important if people think it's a bad company to look at revenue, because revenue is kind of like the ceiling that these companies have, right? And this is SoFi's revenue. And so it's one of those things where, like, people can hate or dislike companies, but their revenue is very strong. Like, look at their revenue. And so what does this mean, right? Like, okay, smart public companies worry less about margins and more about potential when they're young companies, right? So what do I mean by this? I mean that, like, smart companies build their infrastructure up with the extra money that they have. And so smart companies build their infrastructure up with the extra money that they have. And it looks like that's something that SoFi is doing. SoFi is gaining revenue every single quarter. And again, I showed this earlier, but one thing that does look optimistic for SoFi, and again, I'm not telling anybody to buy anything, but here's SoFi's EPS graph. We showed this earlier. It is getting better, right? They showed profits again, where a couple years ago, SoFi was very red, was mostly posting losing quarters. They have since, gone slowly chipped away and gone profitable. Now, if these profits continue to build up quarter over quarter, then SoFi stock might grow. It's very possible it grows. It doesn't mean anything's for sure. We're always just speculating. Of course, I'm not an investment professional. I'm not liable if you lose. But yeah, I think there's a chance it grows, right? I think there's a chance it grows. Higher jobs would mean less chance of a rate cut. Correct. Yes. So higher jobs would mean less of a need to cut rates. Like, why? Because, okay, so typically people cut rates when there's economic weakness and there's bad signs towards the economy, right? And this is the problem. Like, so we get a lot of people, and again, it's all love. I hope you guys understand, like, these are super nuanced arguments, debates, and conversations. So we're going to disagree on some stuff, and that's all good. It should be pretty normal. But with that said, right, this is the biggest thing, that people acting like we should cut rates and that the economy is showing massive signs of weakness. This is like where they kind of hit a slump, I think, in their arguments. Is so I'll sit there and tell people, hey, in order to cut rates, we need signs of a failing economy, right? Historically, what are those signs? Historically, those signs are lowering GDP, like losing GDP, increasing unemployment up to like 4.5% to 5%, and weakness in labor markets are generally the signs of a recession, right? Right now, we have high GDP growth, at least high expectations for it. I think it showed up at like 2.8% GDP expectations. Last time GDP showed up last week. Unemployment's still right around 4%. It did tick up to 4.1%, but right around 4%, right? And again, inflation is the thing that we need under control. And so, the frustrating thing a lot of the times for me, at least, and again, maybe I'm wrong here. Like, it's certainly possible I'm wrong. But for me, it's frustrating because a lot of the time, I tell people, I say, hey, if we cut rates too early, inflation's going to spike. We shouldn't cut rates early. And people argue we should cut rates early. They argue that rate cuts are going to be a positive, optimistic thing. But when I ask why we should cut rates early, their response is because the economy is bad. And when I ask them how is the economy bad, they usually reference some form of too much spending has occurred. Like inflation is high and people are unhappy, specifically from inflation being bad and inflation being high, which is, again, an argument for the opposite thing, which is an argument against rate cuts. We shouldn't cut rates. So we're at a period now where most of the market expects a rate cut. And now the ultimate question, I think, here is, because I think we're going to cut rates sometime over the next 2 meetings, probably in September. Now the real question is, how does the market respond to those rate cuts, right? Like, rates typically can have good and bad influences over markets. Initially, short term, when we cut rates, usually the market actually reacts positively to that. So the market will react positively to rate cuts, and vice versa. Longer term, the market generally reacts negatively, but usually the market reacts negatively long term because we see economic weakness as the need to cut rates. But it's a big nuanced question, and let me know what you guys think. What if people want high inflation? The only people that want high inflation are lenders, right? Lenders want, lenders want more spending to happen because that boosts their sales and business, right? If interest rates are low and everybody wants to buy a home, then your business thrives if you're a lender, But the problem is like that exacerbates the problem massively. Yeah, so that John, thanks for the quick SoFi report. Not even the fanboys. Yeah. Yeah, I don't think we should cut rates at all. I think if we cut rates, it's going to be a bigger problem. SoFi up to 740s, chat, 740s. We do have their earnings call. PayPal looking really nice, really nice. And again, the problem is like most people are generally unhappy because of inflation. Inflation has been rampant over the last 5 years. That's why most people are unhappy. Prices are so freaking high, they can't afford things. And that's a problem, But again, the issue with their logic is that somehow lenders have convinced them that cutting rates is the solution. And cutting rates will exacerbate the problem. It'll make it much worse. And so right now, we have to stay firm. We have to stay strong. We need to keep interest rates high. That's how we combat this. That's how we make prices stabilize. And the only way to really make them stabilize is by keeping interest rates high. The only way, we have to discourage economic spending. And yeah. PayPal earnings are already out. So PayPal killed it with their earnings. They did really, really well. They posted, PayPal posted, here, I'll put it up in chat. But for how long, though? Is long enough it takes for inflation to come back down to at least like around 2%. For CPI, I would argue. Not PCE data. PCE data is already around 2%. It's at like 2.5%. It won't take long to get PCE down to 2%. What we need is a CPI inflation to come back down. And currently, what was the last CPI reading? The last CPI report showed up at 3%, I believe. Yeah, so 3% is what the last report showed, July 11th. So, yeah, we need this number to come closer to 2%. Again, and you're going to, again, it's not always the time to buy a home. One of the things that I asked AI to do is... All right, so one thing I ask AI to do is to give me a graph on home prices and how much they have increased nationwide in the U.S. over the last 5 years, because it's not always the best time to buy a house, right? That's the other thing is like they say, oh, well, we need cheap housing. No, we don't, honestly. We need that market to correct. That market is up way too much. House prices have doubled. Maybe I think they're up like 60%. Not quite doubled, but they're up a lot in the last 5 years, unfortunately. And so, yeah, so like, look, here's U.S. home prices over the past 5 years from AI, right? So AI showed me this graph, right? See if I can hide this. There we go. So again, this is what I did with AI. I said, show me a graph of home prices and how much they have increased nationwide in the U.S. over the past 5 years. Look at SoFi testing highs of the day here. So SoFi breaking highs up here, or at least getting close to it. House prices have gone up 60% since 2019. 60% increase. The home price starts at 100 in early 2019 and reaches 160 by mid-2024. The increase in home prices show a steady upward trend over the past 5 years. Because of this data, it's not time to like pander to real estate. Like, we can't spike inflation just so people can buy more houses. Right? Like, we don't need more house purchases. Like, prices are already up. We need those markets to correct, We need those markets to correct. Like, I could even show the average so let me see if it'll give me a graph based on the actual number. SoFi testing highs of the day here. So the high of the day for SoFi is right at 745s. Right at 745s. Yeah, so look, here's the average home price over the past 5 years, it's gone from 300K in 2019. So in 2019, the average home price was 300,000. It's now at 480,000, right? And this is only by last year. So by mid 2024, yeah, based on Fred and National Association of Realtors data. So again, prices are just up too much, man. We need those markets to correct, and the way you make those markets correct is by keeping interest rates high. That's what you do. Anyway, SoFi testing 750 now, 750. We do have their earnings report in about 30 minutes for SoFi earnings. American Power dropped earnings also. The American Tower Company, I mean, they posted an EBITDA of 189 EPS, 177 expected. Revenue of 2.9 bill, they expected 2.82. The thing though, John, everyone needs a roof. Rent is expensive, and so people pull in. Yeah, but what you got to understand though, Fu, is that it's more expensive because of mortgage rates to buy a home than it is to rent. And the way you get house prices to correct is it's supply and demand, right? If less people want to buy a home, the prices should correct to compensate for it. But it's not always that easy. But yeah. All right, guys, Pfizer coming all the way back down. I'm a little disappointed because I am holding Pfizer, but it is coming all the way back down. SoFi just breaking highs, though. Looks good, up to 750s. Let's see if that holds now. We're actually green on our SoFi position. Took a little while. We've been holding it. Yeah, I mean, I can't really complain too much because I'm in PayPal. I took profit on that. I took some profit on Pfizer up there at 3140s, 3150s. So I can't get too upset. I'm still very green on my Pfizer trade. I'm very green on my PayPal trade. And I'm very green on today overall, really. So, again, I can't be too upset in any of this. Google position's actually really nicely green too. We're in Google. Yeah, I mean CWC. So he said getting rid of the Fed's gonna help. I disagree. I think people blame the Fed for everything, and I've said it before. I'll say it again. I think Jerome Powell's got a very difficult job. Like he makes like a couple $100,000 a year to basically get everybody hating him. Anytime things go right, nobody gives him credit. When things go wrong, everybody blames him for everything. And again, it's not just him. The real issue is that 2020 happened. The pandemic happened. That's nobody's fault here. It's definitely not Powell's fault. You know, now we can critique how people react, but in the end, it was nobody's fault that happened. Like they had to take appropriate like stimulation measures to stimulate the economy and save it, because if they didn't, again, people would be sitting here complaining about a deeper recession, a deeper depression that we were in after those periods of time, right? So again, if they didn't do quantitative easing and they didn't cut rates and they didn't save the economy at the time, people would be even more unhappy, you know? So it's kind of like people are going to critique them no matter what, right? If they don't do anything, people are going to say, oh, well, why are we paying them? They're just sitting there not doing anything. If they do something by economic stimulation, by lowering interest rates, by sending out stimulus checks, by doing quantitative easing and you know, money printing, then people are going to complain about that as well. So it's kind of one of those situations where nobody's ever happy, and that's the nature of the game anyway. But you know, the question you have to ask yourself is, what would you have rathered in 2020? Would you rather a deep depression, or would you rather economic spending and stimulation of the economy through money printing to basically help the economy rebound fast, like it did? It did rebound quickly, right? So which one? High inflation or deep recession? You know, you can't have neither, unfortunately. You got to have one. Yeah, for sure, Fu. All right. Again, PayPal's still very green. SoFi pulling back a little bit. Here's the previous close. We're definitely watching that level here. Yeah, I mean, in the end, we're doing okay versus what we were, right? And it's really easy to say you would rather a deep depression now because we're in the opposite. But I promise you, like, people would have been unhappy regardless. And if you're the Fed, right? So if you're the Federal Reserve, that's what you do. Like, if you're the Federal Reserve and you got some big macroeconomic event that happens that hurts the economy, what you have to do in that situation is try to protect the economy. You gotta stimulate it. You gotta do whatever you gotta do to help people start to work more, spend more, all that stuff. So it's not like, it's easy to say, oh, well, we should have just let the world go into a deep recession or depression, and I disagree. I think all things considered, we're doing okay now. And again, I'm not saying people were perfect. I certainly think people made some mistakes, but all things considered, I think we're doing all right. This correction is making me sad, so just try to make $100 to $200 a day while riding it. I mean, be careful, Dark Tallahassee. Don't try to make your losses back, right? It depends on how the correction is affecting you. Are you investing and you're losing money investing from this? SoFi coming all the way back down to the previous closing price, or are you mad because of Are you mad because of corrections in your portfolio from this, or are you mad from losses in day trading? All right, so Tesla looks very strong right now. The only problem with it is that it's up a lot short term. So I'm in Tesla, but I'm holding it long term. All right, so we're gonna put a timer up for. Pfizer at 31s. All right, so SoFi is still green, pulled back a little bit. Pfizer bouncing back up some. You love to see it. All right, so Jeffrey saying, quote, hey, thank you so much for the donation, brother. I appreciate it. He said, quote, I think we might get a cut tomorrow with a hawkish wait and see for the rest of the year. This would prevent optics of politics of pre-election. Yeah. I don't think we cut tomorrow, to be honest. I just don't think we cut. I think a cut's pretty unlikely. But it's not outside the realm of possibility, So it's not outside the realm of possibility. Like, it could happen. All right, we do have SoFi's earnings call coming pretty soon. Yeah, there's no way. So if we look at the odds, it's just super improbable that we're going to cut rates tomorrow, right? Like, you got to understand here. So, and again, I think this is the biggest mistake people make. Like, I'm going to preface this, though, with that nobody really knows for sure, right? So nobody really genuinely knows whether we're going to cut or not. And it's always possible that we do something. Like, I'm going to take a little bit more off of Pfizer, by the way. It's always possible that we do something outside of expected, right? But with all that said and out the way, and so again, I have no idea what we're gonna do. No idea what we're gonna do. I think anything could freaking happen here, and yeah. But with that said, it is possible that we cut tomorrow. It's just very unlikely, and I think the biggest mistake people make is that every major Fed meeting, we get some people who, for whatever reason, they're just too contrarian, and they always go with something widely unexpected. And they're in chat, and they're very vocal about it. And it's all love. Who said that? It's all love. It's all love, Jeffrey. Like, it's all good, brother. Like, maybe you're right, and I'm wrong, and we'll see what happens. But I always see people go outside of the expected. Like, there's a 4% chance we cut tomorrow. And again, these odds are very, very, very accurate. Like, these odds are super accurate. Like, every time I cover the Fed meeting, and I've covered it for years and years now, every single time I cover it, we have been what was expected for years and years. And this has not been the same outcome for Fed meetings. Like, we raised rates pretty aggressively a few years ago, and then we've been pausing rates now. But every single time this tool thought we were going to do something, especially in terms of like polarization with how big the percentages are for another pause tomorrow, it's been that, right? So it has been what was mostly expected. And so going against that and thinking we're going to go at 4.1%, maybe we do. It's pretty unlikely. I wouldn't make any big bets on it. But again, maybe you're right and I'm wrong. Who knows? That's the nature of the market. Sometimes shocks can happen. I just don't think we're going to cut tomorrow. If we do cut, it should give us a pretty big reaction, though. And so the thing about it is that if we do cut, if the Federal Reserve does cut rates, it should give us a very big reaction. But we'll see. Yeah, it's all good, Jeffrey. I guess for me, my bias, and y'all got to understand my bias, is like I said, every major FOMC meeting, we get people coming out claiming that we're going to do all these things that are wildly unexpected. And then they're shocked and they claim manipulation or whatever when we don't do those things, right? But again, everybody's looking at this number. 96% of people expecting another pause yesterday, and I'm pretty sure that's what we're going to get. Although, again, anything could ultimately happen. Tesla up to 234s, chat. I agree, it's less likely, more of a speciation. I don't even know that word for a reason. All right. Yeah, so again, today we got the jolts report, man. Today's the jolts report. Big report. Big release. What else do we have today? Anything else? Okay, so we got European GDP that did come out. So European GDP dropped early this morning. It showed up at 0.3% versus 0.2% expected. Year-over-year quarter 2 GDP for Europe showed up at 0.6 versus 0.6. So as expected, slightly higher than expected quarter-over-quarter GDP for Eurozone as well, though. So, interesting to see. We also have the Mexican GDP data dropping in 16 minutes at 8 a.m. We got the Case-Shiller house price index today at 9. The big one today, though, chat, again, is CP consumer confidence and jolts. The jolts job opening report is expected at 8.02 million. Last time it showed up at 8.14 million. This is a big report. This will move markets. And so we'll see what happens. But yeah, it will move markets. SoFi back up to 745s, though. So SoFi's still trying, still creeping up. Oh, all good, Jeffrey. Yeah, I didn't know if it was a word. I didn't know, man. All right, chat. Yeah, so SoFi. Again, so we got a lot of stuff dropping today. Today, one thing that I'm very proud of, and honestly, something that gives me a lot of confidence, is that when I look at the market itself, yesterday, as an example of this, the market itself just broke highs of the day here, right? But when I look at the market yesterday, do you guys remember what I said yesterday leading into the opening bell? What did I say about the market? One thing that I was very, very vocal about is that I thought yesterday we would have choppy, sideways, neutral action. And why did I think that? Why did I think that? The reason I thought that is because we're preceding major tech earnings, major economic reports for the rest of this week, right? So today we've got the jolts report at 10. And so one thing that I'm probably going to be doing, not only do we have the jolts report, but today we also have Microsoft, AMD earnings, and a bunch of other ones too. And so with those big earnings reports, I think we have to potentially make a thesis that the market's going to be choppy. We got to look at the market and speculate if it might be choppy. Because again, I think that we got a big chance that it's choppy. Yesterday, we said the same thing leading into the opening bell, and we got this basically all day. We got neutral sideways activity all day. We really didn't do anything. And I think today we're going to get a similar thing, especially the first 30 minutes of the day. Why the first 30 minutes is because the first 30 minutes of the day is most likely going to be where everybody's going to be prepping for the jolts report, the job openings report that drops, the big labor report that drops at 10 a.m. Eastern Standard Time today. And so I think the whole market's going to be prepping for that. And I think it's going to be an important thing to pay attention to and watch, you know. Yeah. It's okay to say it, the Fed will not be raising rates today. Well, yeah, of course we're not raising rates today. Today's Tuesday, you know. We're not going to be raising rates tomorrow either, but definitely not today. Yeah, one of the biggest signs, like, again, I've said this before, but you see a lot of, like, meme YouTubers start covering economic reports. And again, if I were you guys, I'd want to watch somebody that actually knows what they're talking about. I see a lot of them say rate hike universally. Like, rate hike is like hiking is cuts, and like a lot of them don't understand, to be honest, right? What a rate hike is raising rates. It's raising the federal funds rate. So again, I try to do this at least once a day, but look at PayPal rip. SoFi's still up there though, but look at PayPal go up to $63 a share. All right, so I'm going to try to show you this is the easiest way I think to understand economics, right? So when we look at CPI inflation, all right, so when we look at inflation, and I'm going to also put up the Fed funds rate, which is short-term interest rates, right? So when we look at the federal funds rate, we'll put this up first. So prior to 2020 and the pandemic, rates were low. You know, rates were pretty low. You can see 2019, they were at about 1.5% to 2%, right? So very low interest rates prior to 2020. The pandemic happened. The Fed panicked, and they needed to stimulate the economy to save it because nobody was working, nobody was spending, and if they didn't do that, we would have gone into a recession. And so they cut the federal funds rate. They also did quantitative easing, which is a form of money printing that ultimately allows banks to lower interest rates. And you can see they cut rates to almost zero for years to try to save the economy from 2020, right? But the consequence of doing this was inflation spiked. If we pull up a CPI inflation graph here as an example, here's CPI inflation. And in that same period of time, post 2020, what happened? What happened is that inflation spiked because of all this money printing, all this quantitative easing, low interest rate environment. Inflation spiked, right? So the consequence is that prices went up dramatically. And this right here is why people are genuinely unhappy. This right here is why people are not happy about everything, because prices went up so dramatically in that couple-year period after the pandemic. This is why people are unhappy. And so when inflation spikes like that, the Fed has to take the other side of it, and they have to do what's called rate hikes. So they have to do what's called rate hikes, raising the federal funds rate, raising short-term interest rates, and eventually it'll trickle into long-term rates like mortgages and auto loans and everything like that. And so from January of 2022 all the way until, mid last year, that's what the Federal Reserve did. They did a bunch of what's called rate hikes. They raised the federal funds rate. They did quantitative tightening, which is reducing the Fed's balance sheet, taking liquidity away from markets, and ultimately making banks keep interest rates high. And so all of this, the goal of this is to push the economy down, push interest rates up and push the economy down, because when interest rates are high, people spend less. They're going to have less money to spend because they're spending more money on mortgages and auto loans and all this stuff. They're going to have less money to spend. It pushes spending down, ultimately combats inflation. And so since we did that, again, inflation got a little bit better. If you look at CPI inflation graph, it was up to 10%. It basically dropped all the way down to about where it is now for CPI at least, which is about 3%, 2.5%, 3%. And again, since then, we've been pausing the federal funds rate. We've been pausing interest rates. And the question now is, when do we cut rates? When do we start bringing these rates back down? But we're still in a high interest rate environment. But these are rate hikes. Again, if you watch somebody that calls everything rate hikes, these are rate hikes. This is a pause, and a cut would be like this, right? That's the differences. Anyways, SoFi consolidating sideways. PayPal went all the way up to $63 a share. How does oil react to jolts? Typically all of it signals economic strength, and so higher jolts report could make oil go up. It might not, though. I don't think the correlation is super easy to gauge, especially with oil, but I'm not a big oil trader anyway. Oil's down today. Meanwhile, the SPY is the SPY up? Yeah, so the SPY's up, oil's down, though. So the oil tends to move inverse to the market, I think, but who knows. All right, guys. Procter & Gamble, yeah, so Procter & Gamble posted 140 EPS on 20.53 billion in revenue. They missed they beat EPS by about 3 cents a share, but they missed revenue by hundreds of million. So, or by, yeah, they missed revenue by about 240 million. They posted 20.53. They expected 20.78, so they missed. Well, the market and the economy are two different things, RJ. So when we're talking about federal funds rates and interest rates and all that stuff, environment, we're specifically talking about the economy, right? And the economy and the stock market are different things. Like, generally speaking, in theory, when the Fed is doing quantitative tightening, when they're trying to push the economy down through high interest rates environments, a lot of the time the market will go down in theory, right? The stock market. But it's never a perfect science, and I think right now what we've seen instead of that is the big AI boom that we faced, right? So that happened simultaneous to the rate hikes and all that stuff. And so even though we were in a high interest rate environment where the Fed is being restrictive and they're trying to push down the economy, which a lot of the time will push down stocks, because NVIDIA and AI had that big boom, it didn't matter, right? Stocks still rose during that restrictive economic state, and so yeah, it's not always a easy correlation to see stock market wise versus the economy, if that makes sense. Now they're related for sure, but they don't always move with each other. Yeah, prices aren't probably going to go back down. If you have a 5 to 10 time horizon and only buy solid ETFs, diversify, only buy now what you can watch go down 30 to 50%, it's hard to lose. Right, if you're willing to hold long term and you're buying healthy blue chip companies that are legacy, like strong, high EPS, high revenue companies, you're going to make money long term, right? If you diversify well enough into it, you're going to make money long term, you know? That's what people have to understand. Like, you're going to make money long term if you do. All right, guys, we got to the SoFi earnings report dropping, or the SoFi call. Microsoft Meta, no guarantee. Well, I mean, you don't have a guarantee with any major blue chip stock. I think it's more important to diversify into multiple different ones, and if you do, you're usually going to be fine. Like, people like to bring up IBM as an example. They'll be like, oh, well, you shouldn't buy tech stocks because of IBM. But I always bring this up, like, IBM stock. Like, look at the stock. Like, look at the long-term chart. Like, they use this as some type of argument on why you shouldn't buy blue chips. Like, IBM, IBM in 1994 was $9.70 a share. Even in the current landscape where IBM is seen as like an example of weakness long term, it's currently $200 a share roughly, you know. And so generally speaking, Meta, Microsoft are almost certainly going to be fine long term. And again, if you're one of those people that are so biased about like political stuff or whatever that it's hard for you to see strength in the healthiest companies in the world, you're using too much political bias, I think. I think you got to take a step back and understand it's a really risky thing to bet against the strongest companies in the world. And those stronger companies are Apple, Amazon, you know, there's a whole list of them I can put out. And again, I'm not against you. I'm not for you either. I'm pretty neutral politically, but I think too many people have political bias in stocks, and it's silly, you know. Anyways, we got 3.5 minutes, chat. 3.5 minutes. Chipotle, I'm not a big fan of Chipotle. I don't go there that much, to be honest. So yeah, I'm just not a big fan of Chipotle, to be honest. I think they could be better. I think their split was a good thing, though. I think their share price was just way out of line. Yeah, I'm in Palantir. I hope Palantir goes up. But again, it's kind of a mid-cap / small blue chip stock. So I'm just planning to hold it long term and see what happens. But I'm in it right now. I hope it goes up. I originally bought it at like the teens, and then I sold some, and then I had like a 19 something average, and then I sold some, and then I added back, I think, and now I'm in at 25 roughly. Today is going to say the rate cuts would be in 2 months. Yeah, I mean, I think today will probably move choppy and leading into big tech earnings this afternoon. Big tech earnings and the jolts report are the big thing. The jolts report, what you got to understand is that the jolts report, higher than expected, jolts report is going to signal economic growth and less of a need to cut rates. Lower than expected, jolts report is going to signal... Lower than expected jolts report is going to signal less economic growth and more of a need to cut rates, right? So it depends on what the market wants. All right, so we got the earnings call waiting here, chat. So we got the earnings call waiting. I will be right back. Right back, guys. It's all right. I had to switch my headphones out. Let me know if you can hear the music right now. Right now, if you can hear the music, let me know. Can y'all hear the music? You should be able to. SoFi's still up pretty big. We'll see if the earnings call treats it well. Still green on the day, too. Yeah, we can? Okay, good. All right, so I'm going to mute the music, get ready for the call. All right, so we're waiting for the call to start right now, chat. All right, so again, the SoFi call is in progress. We're waiting for it to start. I got it muted in the background, but we're just kind of sitting here waiting. Here, let me put SoFi up, actually. SoFi up to 745s. Here's the SPY. All right, so here's SoFi on the left side. We'll keep the SPY up, though, or SoFi on the right side.
The holding announcement for the SoFi Technologies Q2 2024 earnings conference call. The call will begin in approximately 2 minutes' time. Thank you for your patience.
Okay, so all right, so 2 minutes. So they're basically they're 2 minutes late, is what they said. I'm gonna keep it. I'm gonna turn the sound off and keep the sound on for them so I can see exactly when they start. But again, you guys heard that, correct? That's a good little introduction to the sound check. You guys could hear that, correct? You should be able to. Yeah, so SoFi Technology, again, raised guidance, showed inline EPS profits. So this was like their third consecutive quarter of profits. So yeah, they had their third. There we go. So yeah. Sounding good? All right, cool. All right, guys, be ready. SoFi, 740s right now, 740s. Still technically green over 750. My portfolio, again, is pretty good today. We're pretty good today. Mostly driven by a couple different things, specifically Google. We're in Google. We're nicely green on that. Airbnb's green today. We are in Pfizer. It's green. Obviously, we're in PayPal. Very green. We're in T-bills. Is paying us a little bit. We're in Tesla. It's green. So, yeah, but Google's probably one of my best plays here. All right, chat. We're waiting for the SoFi call to start here. Waiting for the SoFi call to start. All right.
My name is Adam, and I'll be your conference operator today. At this time, I would like to welcome everyone to the SoFi Technologies Q2 2024 earnings conference call. All lines have been placed on mute to prevent any background noise. After the speaker's remarks, there will be a question and answer session. If you would like to ask a question during this time, simply press star followed by 1 on your telephone keypad. If you wish to withdraw your question, please press star followed by 2. Thank you. With that, you may begin your conference.
Thank you, and good morning. Welcome to SoFi's second quarter of 2024 earnings conference call. Joining me today to talk about our results and recent events are Anthony Noto, CEO, and Chris Lapointe, CFO. You can find the presentation accompanying our earnings release on the Investor Relations section of our website. Our remarks today will include forward-looking statements that are based on our current expectations and forecasts and involve risks and uncertainties. These statements include, but are not limited to, our competitive advantage and strategy, macroeconomic conditions and outlook, future products and services, and future business and financial performance. Our actual results may differ materially from those contemplated by these forward-looking statements. Factors that could cause these results to differ materially are described in today's press release and our subsequent filings made with the SEC, including our upcoming Form 10-Q. Any forward-looking statements that we make on this call are based on assumptions as of today. We undertake no obligation to update these statements as a result of new information or future events. And now, I'd like to turn the call over to Anthony.
Thank you and good morning, everyone. Our second quarter results were exceptional and continue to demonstrate SoFi's leadership as a one-stop shop for digital financial services and the amazing grit of our team. I'll cover 5 topics before turning to Chris for a deeper look at our financial and operating performance. First, our strategy continues to drive strong diversified growth, profitability, and returns. Second, our continuous product innovation and brand building are fueling significant member and product growth, which are key to our long-term revenue and profit growth outlooks. Third, turning to our segment results, our financial services segment demonstrates our clear structural advantages in delivering value to members. Fourth, our leadership and agility in lending has generated sustained returns despite rising rates and positions us to move quickly once rates come down. And finally, our tech platform is making good progress on its journey toward becoming the AWS of not only fintech, but of financial services broadly. Turning to the first topic, the success of our one-stop shop strategy. For Q2, adjusted net revenue reached a new record of $597 million, a 22% year-over-year increase. Our rapid diversification made a record revenue quarter possible, even with just 5% growth in adjusted net revenue in lending. Combined, financial services and tech platform revenue grew 46% year-over-year and now makes up 45% of total adjusted net revenue, up from 38% 1 year ago. To put that accomplishment in context, lending now stands at just 57% of adjusted net revenue compared to 99% of our revenue when I joined nearly 7 years ago, and more than 70% of revenue just 2 years ago. We also delivered even greater growth and profitability in the quarter. EBITDA grew 80% year-over-year to $138 million. We recorded our third consecutive quarter of GAAP profitability with $17 million in GAAP net income versus a loss of $40 million in Q2 of 2023. Credit performance was better than expected as cumulative fair value adjustments from delinquent loans peaked in March, along with delinquencies on an absolute and percentage basis. We are really encouraged by our team's ability to bend the curves through stringent underwriting, limiting credit exposure when prudent, and improving collections and servicing. Chris will share details on the performance of our recent personal loan vintages, which show clear improvements versus older vintages, underscoring our confidence in our prior guidance around life of loan losses peaking in the 7 to 8% range. Our loan sales continue to scale at attractive execution levels with an increasingly diversified set of buyers, with $1.6 billion in total sales this quarter and $4.7 billion in the 3 trailing quarters. This brings me to my second topic. Our rapid pace of innovation and brand building are fueling significant member and product growth. The growing size of our member base and the number of products they use impact the results we're reporting today. But more importantly, they are the leading indicators of our potential revenue growth and profitability in the future. In Q2, we added 643,000 members and now have 8.8 million in total. That's up 41% year-over-year. We grew products in the quarter by 946,000 to 12.8 million in total. That's up 43% year-over-year, adjusting for our exit from crypto last year. Nearly 40% of all new products in Q2 were opened by existing SoFi members. We also see that nearly 30% of new members open a second product in the first 30 days, demonstrating the immediate value of our one-stop shop strategy. We've doubled our member base and number of products in the past 2 years, and Q2 was the 20th consecutive quarter of greater than 30% growth. Our growth in members and products will drive our financial growth for years to come and is the basis for our 3-year financial outlook shared at the end of 2023. All this growth is a direct result of our relentless focus on innovation. Because we offer products across 8 categories compared to many fintechs that only offer 1 or 2, the magnitude of our innovation is not always obvious. As much as I'd love to share the full breadth of what we shipped in the quarter, I'll just cover a few of the highlights. I'll start with our financial services business, which drove 91% of our new product adds in the quarter. Our Invest offering is getting better every day. In fact, I don't know of any other self-directed product that offers alternative assets like private credit, private real estate, and private venture investing side by side with fractional shares, robo-funds, ETFs, and IPOs. Our innovations over the last year are starting to accelerate results, driving a 58% year-over-year increase in assets under management in our Invest business in Q2. And this was driven largely by net flows. We fully rolled out alternative assets and mutual funds, including interval funds from well-known financial leaders in KKR, Carlyle, Franklin Templeton, and ARK Venture Fund, which includes several leading private technology companies. Alternative assets generated 12% of all net flows during the second quarter. We brought the concept of one-click checkout to individual asset transfers, enabling our members to consolidate their assets the way they would like, and now we're seeing benefits from that innovation as well. We are now finalizing a turnkey way for companies going public to extend participation in their IPOs at scale to their customers, employees, and partners. With this new directed share program, people can open an account, enter an order, and fund it in minutes without fees, minimum balances, or speaking to anyone in order to participate in an IPO. Turning to SoFi Money, in the quarter, we launched Zelle, one of our most requested features and one element of our much larger money movement product pipeline. The innovations in our member business unit, which focuses on ensuring our products work better when used together, are reaching critical mass. For example, 3 million members have signed up for SoFi's broad-based rewards program. We're creating a rewards economy across our products, including rewards for using our app and other services, and we're expanding redemption options, including into stocks, cash for savings, and travel. For SoFi Plus, we achieved 1 million members. For people that are not familiar with SoFi Plus, it is our premium membership tier available to those who enable direct deposit. SoFi Plus includes our highest APY on banking balances, which today is up to 4.6%. It also includes up to 2x reward points, up to 3.3% cashback rewards on SoFi credit spending, discounts on personal loan rates, and much more. And I'm very excited to share that we've laid the foundation to provide more value in SoFi Plus, not only to direct deposit members, but also a monthly paid subscription product for those who prefer that option over direct deposit. We intend to test this new subscription-based option for SoFi Plus later this year. We're also driving iteration and learning to drive innovation in credit cards. We improved our acquisition capabilities and introduced a 10% cashback boost for SoFi Plus members that has shown positive results. And I'm excited to share that this week we'll also begin testing 2 new credit cards to better serve our members' needs. One card for cashback rewards on everyday high-spending categories, and one for members who need a no-frills card with no surprise fees. Turning to lending, we've launched new capabilities that position us for future growth, especially as the rate environment improves. In small and medium business, members can now apply for a loan at SoFi and get approved offers from lending partners. In home loans, we can now close our home equity products instead of brokering them out. This dramatically increases our potential for revenue per loan. Notably, we're now a principal in home equity loans and can offer members a lower cost of borrowing in these secured loans compared to higher rates in unsecured lending. And of course, our tech platform is a center of innovation as we add capabilities to our already comprehensive offering. We expanded our buy now, pay later product for post-purchase use. We added new wire capabilities and extended the AI-driven transactional fraud capabilities in our payment risk platform to non-processing partners. We also advanced the quality of our managed service in the cloud and introduced 3DS, which adds another layer of security to digital card transactions. These improvements ensure our modern, cloud-based platform will continue to serve the needs of brands, fintechs, and global financial institutions alike. Having world-class products is a necessary factor in becoming a top 10 financial institution, but it's not enough. We must also become a trusted household brand name. We measure this by our unaided brand awareness. Our world-class marketing team stands in a category of 1. Their amazing work has increased unaided brand awareness to the 7 to 9% range, which is up about 40% year over year and 4x since 2021. Our brand punches way above its weight as our team continues to make its footprint bigger than its foot. Now diving into our segment results. In financial services segment, we are seeing the continued benefits of structural advantages that drive our leading value proposition. We reported record segment revenue of $176 million, up 80% from $98 million in the year-ago quarter. Importantly, this drove contribution profit of $55 million compared to a loss of $4 million 1 year earlier. Financial services products grew $865,000 in the quarter, up 48% year over year, adjusting for our exit from crypto last year. Revenue per product grew 8% quarter over quarter and 29% year over year. We believe there's substantial upside to the monetization of our financial services products. SoFi Money achieved new records this quarter as ending deposits totaled $23 billion, with consumer deposits up $2.2 billion from the previous quarter. Account openings grew by 419,000, and 90% of our deposits remain tied to sticky direct deposit relationships. Debit spend also continues to increase at a rapid pace, up 129% year over year, and now annualizing at about $9 billion. Our credit card and invest businesses remain in investment mode with nearly $100 million in annualized losses, but we expect them to follow a similar path to Money in achieving variable profit and contribution profit. In our credit card business, delinquency entry rates and roll rates improved by roughly 20% apiece from 2023 averages. Turning now to my fourth topic, our strong leadership across lending. We reported strong results despite our conservative posture, given a 500 basis point increase in benchmark rates over the past 2 years and continued macro uncertainty. Importantly, net interest income reached an all-time high of $279 million, or 82% of lending revenue versus 72% 1 year ago and 45% 2 years ago. Net interest income is cash revenue. Let me say that again. Net interest income is cash revenue, so 82% of our lending revenue is cash. Notably, discount rates and spreads were largely unchanged and in aggregate had a slight negative impact on lending revenue. Our personal loan originations reached a record of $4.2 billion while sticking to stringent underwriting standards as our team demonstrated its grit by consistently iterating on pricing and marketing throughout the quarter. Our home loan originations were their highest since Q1 of 2022, growing 24% quarter over quarter and 71% year over year, despite interest rates at their highest level in 10 quarters. On top of that, purchase home loan volume was our highest ever, growing 25% from Q1 2024 and nearly 100% year over year. Once rates come down, we expect to benefit from our expansion into 3 products in home lending: purchase loans, home equity loans, and the volume already generated by our financing business. Student loan originations grew 86% year over year. The team drove our strongest Q2 of origination volume in 3 years by iterating to drive continuous improvement throughout the quarter and into Q3 with private loan refinancing, which exemplifies our ability to respond to environmental factors to drive results. And my 5th topic, the tech platform segment is making good progress on its journey to become not only the AWS of fintech, but of financial services more broadly. We recorded segment revenue of $95 million, up 9% year over year, and contribution profit of $31 million, up 82% year over year at a 33% margin. This represents our 4th consecutive quarter of over 30% margin. Our customer wins have been more diverse, including but not limited to secure card and B2B partners. Our pipeline of interest remains robust and includes U.S. and international financial institutions, along with major consumer and commercial brands. As we have noted, we are pursuing enterprise partnerships with larger existing customer bases for more durable revenue opportunities. These partnerships take multiple quarters, not months, to win and have even longer integration cycles due to their size and complexity. In closing, the quarter was exceptional. We continue to demonstrate a record of strong, diversified growth, even in uncertain times. The performance of our leaders and the grittiness of our team was the best I've seen in my 7 years here. Suffice it to say, I cannot wait to see what we achieve in a better climate. Combining our high member growth and product innovation with lower benchmark rates, unemployment at 4 to 5%, stable inflation, and a stable economy, I could not be more confident in our ability to achieve our ambitions. With that, I'll turn it over to Chris for a deeper look at the results.
Thanks, Anthony. The second quarter was underscored by continued execution, profitability, and increased diversification. Strong evidence of how our differentiated business model drives SoFi's durability and long-term growth potential. I'm going to walk through key financial highlights and our financial outlook. Unless otherwise stated, I'll be referring to adjusted results for the second quarter of 2024 versus second quarter of 2023. Our GAAP consolidated income statement and all reconciliations can be found in today's earnings release and the subsequent 10-Q filing, which will be made available next month. For the quarter, we delivered record adjusted net revenue of $597 million, which grew 22% year over year. Adjusted EBITDA was $138 million at a 23% margin. This represented over 7 points of year-over-year margin improvement, demonstrating significant operating leverage. In fact, sales and marketing declined as a percentage of adjusted net revenue by 6 points relative to the year-ago quarter. We delivered our third quarter of GAAP profitability, with GAAP net income reaching $17.4 million, a $65 million improvement year over year, and GAAP EPS of 1 cent per share. Now on to the segment-level performance. In lending, we achieved adjusted net revenue of $339 million, with $198 million of contribution profit at a 58% margin. These results were driven by 20% year-over-year growth in net interest income, while non-interest income was down 38% as planned. Growth in net interest income was driven by a 40% year-over-year increase in average interest earning assets and a 27 basis point year-over-year increase in average yields. This resulted in an average net interest margin of 5.83% for the quarter, up 9 basis points year-over-year. In terms of non-interest income, Q2 originations grew 22% year-over-year to $5.3 billion and were driven by a record quarter in personal loan originations, which grew 12% year-over-year and 28% sequentially to $4.2 billion. Our student loans business saw origination volume grow 86% year-over-year, with a slight 2% decline sequentially to $737 million. Home loans grew by 71% year-over-year and 24% sequentially to $417 million. Our personal loan borrowers' weighted average income is $168,000, with a weighted average FICO score of 747. Our student loan borrowers' weighted average income is $137,000, with a weighted average FICO score of 764. In the second quarter, we sold portions of our personal loan and home loan portfolios totaling nearly $1.6 billion. In terms of the personal loan sales, we closed $1.1 billion of principal at a blended execution of 106.2%. These sales had similar structures to other recent personal loan sales, with cash proceeds in line with par or at a small premium to par, with the majority of the execution premium consisting of a contractual servicing fee that is capitalized. These deals included a small loss share provision that is above our base assumption of losses and immaterial relative to the exposure we would otherwise have if we held the loans. Our $381 million of home loan sales were sold at a blended execution of 101.9%. Additionally, we sold $69 million of late-stage delinquent personal loans in the quarter. We noted last quarter that we typically have not sold delinquent loans until such time that they are charged off. However, we've been able to generate positive incremental value in these sales relative to selling after they charge off, both from our improved recovery capabilities and by maintaining servicing. Finally, we executed $989 million of senior secured financing, which will show up on our detailed balance sheet as senior secured loans held for investment at amortized cost. These loans have a fixed-term structure and are secured against the underlying assets, therefore equivalent to investment-grade bonds if you were to do a securitization for the same pool of collateral. In addition, these loans are priced at market rates, which not only helps to diversify our balance sheet, but also provides an additional return above our cost of funding and a yield similar to the net interest margin of our loans, which are unsecured. Turning to credit performance, our on-balance sheet 90-day personal loan delinquency rate was 64 basis points in the quarter, a decrease from 72 basis points in Q1, which is evidence of surpassing a peak. Our personal loan annualized charge-off rate increased to 3.84% from 3.45% in Q1 2024, including the impact of asset sales, new originations, and the delinquency sale in the quarter. Had we not sold these late-stage delinquencies, we estimate that including recoveries between 90 and 120 days delinquent, we would have had an all-in annualized net charge-off for personal loans of approximately 5.4%. For our student loans, our on-balance sheet 90-day delinquency rate was 12 basis points versus 13 basis points last quarter, while our annualized loan charge-off rate was 64 basis points. That brings me to an important point: an in-depth look at cumulative net losses on several of our personal loan vintages and how this underscores comfort in our 7 to 8% maximum life of loan loss assumptions in line with our underwriting tolerance. As you can see on page 8 of our investor presentation, a loan vintage analysis indicates the following. Using our 2017 vintage as a starting point, as this is the last that approached 8% life of loan losses at 7.85%, you can see significant improvement in cumulative net losses at a given percentage of remaining unpaid principal for more recent 2022 and 2023 vintages. Specifically looking at the Q4 2022 vintage, soon after we made material cuts to credit, at roughly 40% of remaining unpaid principal, net cumulative losses of 5.02% are well below the 6.07% observed in the 2017 vintage at that same point of 40% remaining principal balance. In addition, you can see that more recent vintages are performing as well or better than the Q4 2022 loans at similar levels of remaining unpaid principal. This is critically important as this analysis and comparison gives us confidence that our loans will continue to perform in line to better than our tolerance. Furthermore, looking at page 9 in the investor presentation, you will notice that only 44% of unpaid principal remains from our Q1 2020 through Q1 2024 originations. Among the 56% of principal that has already been paid down, we've seen only 3% in net cumulative losses. For life-of-loan losses on this entire cohort of loans to reach 8% net cumulative losses, the remaining unpaid principal would need to charge off at a rate of 11%. Past vintages have performed meaningfully better after this point in the seasoning curve, further improving our confidence in achieving loss rates below 8%. Now turning to our fair value marks and key assumptions. Our personal loans are marked at 104.3%, 5 basis points higher quarter over quarter, with a negligible change in the discount rate. For our student loan portfolio, the fair value mark decreased by 17 basis points to 103.6%, while the discount rate rose by 10 basis points to 4.44% due to rising rates and a wider spread. Overall, sequential changes in spreads and discount rates had a negative impact on reported revenue. Moving on to financial services, where net revenue of $176 million increased 80% year over year, with new all-time high revenue for SoFi Money and our loan platform business, as well as continued contributions from SoFi Invest and Credit Card. Overall monetization continues to improve, with annualized revenue per product of $64, up nearly 29% year over year versus $50 in Q2 2023. This is driven by higher deposits and member spending levels in SoFi Money, greater assets under management and monetizable features in SoFi Invest, and robust growth within SoFi Credit Card spend. Net interest income of $139 million increased 87% year over year, which was primarily driven by growth in consumer deposits. Importantly, non-interest income grew 58% to $37 million in the quarter, which represents approximately $150 million in annualized revenue. This was driven by interchange growth of 67% year over year as a result of over $10 billion in total annualized spend, as well as our referrals from our loan platform business, which grew 66% versus the prior year period. Contribution profit reached $55 million at a 31% margin for the quarter, even as we continue to invest in innovation and new opportunities to rapidly grow this operating segment with attractive returns. Lastly, we reached 11 million financial services products in the quarter, which is up 39% year over year, with 865,000 new products in the quarter. We reached nearly 4.3 million products in SoFi Money, 2.3 million in SoFi Invest, and 3.9 million in Relay. Shifting to our tech platform segment, where we delivered net revenue of $95 million in the quarter, up 9% year over year and 1% sequentially. Revenue growth was driven by strong performance from new clients onboarded over the last 4 quarters, along with strong monetization of existing clients on our platform. Galileo accounts grew 23% year over year to 158 million. The segment delivered a contribution profit of $31 million, representing a 33% margin. We continue to leverage investments made in the segment as we continue to position tech platform for higher rates of diversified, durable growth going forward. As mentioned earlier, a strong pipeline of interest spans financial institutions along with major consumer and commercial brands, representing larger and more durable revenue opportunities and with longer sales and integration cycles due to the size and complexity. Shifting to our balance sheet, where we remain very well capitalized. Assets grew by $1.3 billion as a result of $2.1 billion of growth in loans and approximately $800 million decrease in cash, cash equivalents, and investment securities. On the liability side, member deposits grew by $2.2 billion to $21 billion, while overall deposits increased to $23 billion. We also reduced our brokered deposits by $800 million as we continue to use our consumer deposits to replace higher cost parts of the funding stack and we exited the quarter with $1.1 billion of warehouse debt drawn. Currently, there is a 213 basis point difference between the interest we pay on deposits and the interest we pay on warehouse lines, which translates to about $500 million in annualized interest expense savings, given the size of our deposit base. This difference also continues to support our net interest margin, underscoring the benefits of having the option of holding loans on balance sheet when advantageous and collecting net interest income. Overall, we expect to maintain a healthy net interest margin above 5% for the foreseeable future and benefit from the continued mix toward deposit funding, along with our ability to sustain healthy deposit versus lending betas. In terms of our regulatory capital ratios, our total capital ratio of 16.8% decreased by approximately 50 basis points from 17.3% last quarter and remains comfortably above the regulatory minimum of 10.5%. Lastly, we grew book value to $5.9 billion and tangible book value by $92 million sequentially to $4.2 billion, with tangible book value per share at $3.92. Now on to guidance. Throughout the last 12 months, we have demonstrated the benefit of having a diversified, high-growth set of revenue streams, multiple cost-efficient sources of capital, a keen focus on underwriting high-quality credit, and a high degree of operating leverage as we scale the business. We expect those benefits to persist even in light of the macro backdrop. For Q3, we expect to deliver adjusted net revenue of $625 to $645 million, adjusted EBITDA of $160 to $165 million, GAAP net income of $40 to $45 million, and EPS of 4 cents per share. For the full year 2024, we now expect to deliver adjusted net revenue of $2.425 to $2.465 billion, which is $35 million higher than our prior guidance range of $2.39 to $2.43 billion. This implies 17 to 19% annual growth versus 15 to 17% previously. This guidance now assumes lending revenue will be at least 95% of 2023 levels, financial services will grow more than 80% year over year, and tech platform will grow mid to upper teens % year over year. While this is lower than our original 20% guidance for tech platform, we view this as transitory and still feel confident in our multi-year growth guidance for this business. We now expect to deliver adjusted EBITDA of $605 to $615 million, above our prior guidance of $590 to $600 million. This represents a 25% adjusted EBITDA margin. We now expect full-year GAAP net income of $175 to $185 million, above prior guidance of $165 to $175 million, and GAAP EPS of 9 to 10 cents per share, above prior guidance of 8 to 9 cents per share. We continue to expect growth in tangible book value of approximately $800 million to $1 billion and continue to expect to end the year with a total capital ratio north of 16%. We continue to expect to add at least 2.3 million new members in 2024, which represents 30% growth. Overall, we couldn't be more proud of our Q2 results. Having delivered $597 million of adjusted net revenue and $138 million of adjusted EBITDA, we continue to make great progress against our long-term growth objectives and remain very well capitalized to continue to pursue our ultimate goal of making SoFi a top financial institution. With that, let's begin the Q&A.
At this time, I would like to remind everyone that in order to ask a question, please press star followed by the number 1 on your telephone keypad. Please keep in mind we'll take only one question per person at a time. Please rejoin the queue for any additional questions. And the first question comes from John Hecht from Jefferies. John, your line is open. Please go ahead.
Okay, guys, so I'm going to go ahead and end this right here just so we can cover some stuff in pre-market. So that is the SoFi earnings report. So far, it is reacting very positively it's reacting very positively to its earnings report. It's currently at 755s a share, 755s. And so what did you guys think about the earnings call? So, yeah, it seemed pretty good. So we had PayPal earnings. Where's PayPal up? So again, we're going to... So we had SoFi. What other earnings? PayPal, Pfizer, and more. Yep. So SoFi at 755. So we're in SoFi right now. I hope it continues. I really do. Yeah, we'll see if it continues. Yeah. S&P Global earnings. Why did they delay the jolts by 1.5 hours? So Rogan, so Rogan, they didn't delay it by 1.5 hours. The jolts report is always at 10 a.m. Eastern Standard Time, along with CB Consumer Confidence today, and so it's always later. It's always a later report. It's never really, it was never an 8:30 report. The jolts report is always, man, look at PayPal up big here. I took a little bit off of my PayPal trade this morning. Yeah, I don't know whether I should take more off or what I should do with this, to be honest. I'll take a couple more. Just a little baby sell. I'll take just a little bit off. Yeah, we'll see. SoFi up big, though. SoFi up big. It's at 750s. We'll see if that continues. Let me get my music playing here. I got so many windows up. Let me exit out of some of this stuff. But yeah, SoFi up big, PayPal up big. Pfizer still pretty green on the day also here. So we got a lot of green action. Today's a massive, massive day for stocks and markets here. We got, again, we got the jolts report coming out later on today. We've got CB Consumer Confidence. We've got Microsoft and AMD earnings. So it's just a big day. How long did it take you to get good at trading? Years. Yeah, we also have the Case-Shiller in 22 minutes. House price index. But yeah, so the jolts report expected at roughly 8 million, So we'll see what that looks like too. I'm ready. Yeah. So we got big jobs report coming out today too. You guys ready? When did you see a break of the learning curve? So I think a lot of traders enter the market and they think it's going to be like a get-rich-quick scheme. But it's not. It's just not that. Like, it's not a get-rich-quick scheme. Most traders lose money. And so every trader thinks they're going to be different. Like, they're going to be some type of savant outlier. And they almost never are. So the jolts job opening report again expected at 8.02 million. But yeah, every trader is almost certainly going to lose in the beginning. Every trader thinks they're different. I mostly blame marketing. All right, so we're going to cover the full report for jolts live on stream later on today in a couple of minutes, as well as day trade. All right. I'm ready for the jolts report. jolts. Honestly, we'll see what jolts shows up as. Job report. So the JOLTS job report will signal economic growth with the rate cut decision tomorrow in Microsoft earnings tomorrow. The real question is, how does this affect things, man? This is a big report. Yeah, so this is a crazy big report. The JOLTS report, massive, massive report. Again, it is the FOMC week as well, which is kind of a crazy week. Yeah, we got... So tomorrow we got non-farm employment change numbers. So Friday we have the non-farm payroll report. We also have... So yeah, Friday we have the non-farm payroll report. Yeah, we got the JOLTS job report. Let me end this poll. Let me get rid of this. Sorry, I'm typing some stuff here, getting it ready. Alright, we are ready. Ooh, let's see what we get here, chat. Keyboard is so loud. I'm just a fast typer, guys. My bad. I had to finish that. A+ typing class. Yeah, I type about 100 words a minute, honestly. But yeah, SoFi at 753s, SPY at 546s. Again, jolts are expected at hey, let me get rid of this thing. So here's the jolts expectations. Jolts is expected at 8.02 million. Last time it came in a little bit higher at 8.14. So last time it showed 8.14 million, which was over what with the expected numbers, I believe, right? So yeah, last time it showed 8.14 million, which is a little bit over expected. So again, jolts expected at 8.02. Last time showed 8.14. Where's Bitcoin at today? So I know, again, PayPal's still very green. Bitcoin dipped a little bit from yesterday. Bitcoin tested 70K yesterday. It's now coming back down a little bit. Tesla up to 234s. SoFi still holding up there. SPY still pretty green. Again, I think we're going to get choppiness today, personally. I have no idea what we're going to get, though. Like, nobody knows, really. But I guess I think we're going to get choppy behavior today. Nobody freaking knows, though. Like, anything could ultimately happen here, and we just got to be smart. So, yeah, we just got to be smart. Again, we got so much economic reports outside of today, right? So one thing that I'm going to be clear, and again, we're going to be doing our day trading stream in a couple minutes, right? One thing I would stick around for is because my guess, and again, it's straight up just a guess. This is a good poll question. My guess is that we're going to get choppy behavior leading up to the jolts report. Why? Because I think 66% of people, again, think jolts shows up higher. 33% think we're going to show up lower. The good question that I'm going to have is, do you think we get choppy action leading into jolts? Yes or no? I'm going to look to day trade that action. Yesterday, again, we were very vocal about how we thought we would get choppy behavior leading into the jolts report. We thought we would get flat behavior, and if you look at the market, that's exactly what we got yesterday, and we made money on it too. We were down to start the day, down a couple hundred. We ended up ending the day actually green, net green. We made a little bit when we closed down the stream, but again, we got exactly that choppy behavior. Now, with the jolts report dropping at 10 a.m., I think we have this very unique situation in which after the opening bell, we have 30 minutes before a major report. So again, we're going to have some time to potentially move choppy and take advantage of it. The only problem is that a couple things. Number one is that we did have major earnings drop today. We had major earnings. We had Sofi release their earnings. We had PayPal drop their earnings. We had Pfizer drop their earnings. What else did we have? We had... trying to see all the other reports that we had today. We had PayPal, we had Pfizer. What else we got? We had PG, Procter and Gamble. We had BP. And we had Merck. So these aren't the biggest reports. But again, this afternoon, this is just in the AM. So this is AM. In PM today, we've got the big boys, which are, again, in PM today alone, we've got Microsoft. Terrible drawings, I know. AMD. We got Microsoft. We got AMD. We've got Pinterest, I believe. We've got Microsoft. What earnings report are you guys looking forward to the most? Sprouts. Yeah, y'all hit that like button. I appreciate it. Yeah, the whole week might be choppy. Again, not only do we have these big earnings plays, the jolts report, but tomorrow we've got the FOMC decision, right? So tomorrow morning we got the FOMC decision. Tomorrow afternoon we have Meta. Tomorrow morning we got the non-farm payroll report, as well as Chicago PMI pending home sales, Jerome Powell speech tomorrow morning. All of these things could contribute to choppy behavior in markets. And so again, if we're going to look to play something, that's what we're going to look to play. Thursday, we got jobless claims, non-farm manufacturing. Thursday, we have jobless claims, non-farm productivity, S&P manufacturing, PMI data, ISM manufacturing, PMI data at 10. And then Friday, we have the biggest report of the week outside the Fed meeting, which is non-farm payrolls report, as well as unemployment. So everybody pushing that we're in a recession, we're about to really see, because I think now's the time to really see if we're in that big recession that people are talking about or not. Which one do y'all think is more important, Microsoft? We asked this earlier. Which one do y'all think is more important, Microsoft or AMD? We're gonna cover both, but I'm curious which one y'all think is more important there. Palantir. When's Palantir? Sofi still up. I wonder if I can convert some of these strategies to toss. Yeah, so actually my family and I are watching Lord of the Rings right now. We're now, my son has never seen it. My daughter and I watched it years and years ago. It's honestly my favorite movie, or one of my favorite movies, right? Sofi earnings are pretty good. They're gapping up today, but Lord of the Rings trilogy is my favorite trilogy ever. It's either that, maybe Godfather, but Lord of the Rings movies are some of my favorite movies ever. My son had never seen them though, and so my son's now watching the Twin Towers with me. What's it called? The Two Towers. Yeah. So my son's watching that one. So we're halfway through the Two Towers, Lord of the Rings movie. Great. Honestly, it's just some of the best movies ever made, realistically. Yeah. Roblox. Yeah, The Hobbit, I can tell The Hobbit wasn't that good because I loved Lord of the Rings. I went and saw the Lord of the Rings movies in theaters when they came out, right? So when the Lord of the Rings came out, my parents took me when I was a child in theaters. Loved them. Freaking loved them. I hated going. I was throwing a fit about going to the movies. Not throwing a big fit, but like I wasn't the happiest about going to the movies at the time because I didn't know what the Lord of the Rings were. I thought it was some adult movie. We went and watched it. One of my favorite movies of all time, especially favorite trilogies. But I love the original trilogy. I couldn't make it through The Hobbit, to be honest. And I definitely couldn't make it through the other ones, too. And so you could tell they just weren't as good. Worse writers for Hobbit, for sure. I mean, I know they're basing it off of material in the books, but the movies had just worse producers, worse creators, worse directors of the movies. Yeah, I would say the first three Godfather movies are, really good. The fourth one, eh. You mean the cartoon, Justin? All right, guys. 7 minutes before 9 a.m. 7 minutes. Oh, you're talking about the new series. I watched the first season of the new series. I never made it to the end, though. It just wasn't as good. Like, the problem with most modern day movies, because like everything has to be so PC, and again, I'm not really like political, but everything has to be so PC that everything's kind of predictable now, unfortunately. Like, you know who the good person is, you know who the bad guys are gonna be, and so like as a movie lover, the real issue is predictability, right? Like, I don't want to be able to predict who the good guy and bad guy is 5 minutes into the movie. There's an issue with that, right? Like, it's too predictable now, unfortunately. And again, the movies in general, like the movie theaters in general, have a big problem because, I mean, I went and saw Twisters, and Twisters was genuinely good. I actually like Twisters. Yeah, for sure. You like The Hobbit, but didn't like the original trilogy? Yeah, bro. The original trilogy was, again, in my opinion, one of the best movie trilogies of all time. It's up there for sure. I think it probably is the best. If I had to vote on one, it's probably that. All right, guys. All right, so let's see. I'm working on this code here. I want to make sure that you guys can't see it. So bear with me. I'm ashamed. Saw the Two Towers before I saw Fellowship. Yeah. Two Towers is one of the best ones. A lot like Return of the King's good, but Two Towers is good. Anyway, SoFi up there. SPY very flat, very choppy leading into the opening bell today. Again, my guess is that we're going to continue to see choppiness. A lot of unknowns. People don't know what to do here. They don't know whether they should go big or small or anything like that. You know. My guess is we're gonna get choppy behavior today, is what I think. 74% of people think we get choppiness leading into today. Yeah, I don't know. We'll see. Make sure everything is good. All right. You guys ready for the JOLTS report? Honestly, I'm excited for it, to be honest. Oh, wait, here. Yeah, so PayPal has a nice little dip. We've already scaled out of PayPal again. We made money, like really good money on PayPal, but we still have to kind of wait here. JOLTS is at 10 a.m. Eastern Standard Time, live on stream today, guys. So JOLTS is at 10 a.m. Eastern. Yeah, so Palantir, we'll cover Palantir for sure. Yeah, no, I've already built them on PineScript, Rich. So yeah, I've already built them on PineScript, brother. What was I about to do on my phone? Yeah, Palantir. What was I about to do on my phone? I pulled my phone up. Oh yeah, I know what I'm about to do. 10 a.m. Yeah, so again, the nuance of the JOLTS report is this. Okay, so the JOLTS report drops. If it's higher than expected, that signals more economic growth, right? If it's lower than expected, that signals less economic growth. And so it's important because, you know, with tomorrow being the Fed decision, where the Fed is going to potentially, most likely, pause rates, you know, so the Fed's most likely going to pause rates. With that tomorrow, economic growth in the JOLTS report is a major job report. Like, it's a big report. Chips are gonna roll. Yeah, we got about an hour until the JOLTS report goes live. About 1 hour. I need a video to pop. All right, guys. So yeah, we're gonna get ready. We're gonna go over to our day trading stream / JOLTS report stream right now. And so again, the JOLTS report is going live in an hour. We're gonna stream the entire thing. Don't go anywhere. If it doesn't, for whatever reason, bring you to the JOLTS stream. If it doesn't, for whatever reason, bring you to the day trading / JOLTS stream. Here's the link. Watch our day trading / JOLTS stream. There's the link right there in chat. Again, as soon as we close this stream, chat, as soon as we close this stream, it should immediately bring you to the JOLTS report live stream. As soon as we close this stream, it should immediately bring you to the JOLTS report live stream. We're going to be day trading, hopefully choppy action, leading into the JOLTS report, and then we're going to cover it live as we always do here. Chat, as we always do. We're going to cover this completely live on stream as we always do. Do not go anywhere. Hopefully we can make some money. The reason we get a lot of people tuned in for these big streams is because we cover it quick, chat. We cover it quick. And so be ready. We're going to start that stream up right now. And again, we're going to close this stream. There's the link. I'll see you guys over there.